Wesley Boudreau, one of the financial advisors here at the Retirement Group. Today we're going to do a really quick update on interest rates and how they're affecting the ExxonMobil pension lump sum calculations for both the first quarter and the second quarter of 2022. Now, a quick reminder, the Retirement Group, we are an independent financial advisory firm, so we're not affiliated with nor employed by ExxonMobil. However, we've been working extensively with ExxonMobil employees and retirees over the last decade plus. So if you have any questions about the pension calculations or how it affects your retirement plans, just give us a call at 1-800-900-5867. We'll be more than happy to walk you through that. Now, as far as interest rates and how they affect the lump sum, the way it actually works for the Exxon plan is your defined benefit plan is a defined benefit, in which case there's a formula to calculate out what your single life annuity is going to be for the rest of your life. However, if you want to look at options of like a joint survivor annuity, you can do that, or you can do a lump sum, in which case you say, okay, I want to take the full cash, reinvest it myself, and see if I can't outperform that annuity that Exxon would give me. Well, in order to do that, what happens is Exxon takes a look at your age, life expectancy, so you have to figure out how many more months or years they have to pay you this annuity. Look at the current interest rates to determine how much would they have to give you for you to essentially go out and recreate that. So when interest rates are low, they have to give you more money to go out and try and recreate that annuity. And that's kind of the environment we've been in the last 2 years. For good or bad, thanks to the pandemic, it's actually driven down interest rates, which has driven up a lot of your ExxonMobil pension lump sum calculations over the last 2 years or so. However, we're at a point where we're seeing those start to transition and interest rates starting to move up, and we're starting to see a decline in the lump sum. So that's what we're going to talk about today. But if we look at that quick slide up there, keep in mind when interest rates go up, your lump sum is going to come down. When interest rates go down, your lump sum will come up. Generally speaking, the correlation is about a 1% change in interest rates will affect your lump sum by anywhere from 8 to 12%. So let's look at a quick rule of thumb. Think about a 1% change could affect you by about 10% or so. So for instance, if you were looking at your lump sum calculation right now and it was $500,000 and interest rates were to go up by 1% over the next year, you could lose $50,000 in that actual lump sum calculation. If it was $1 million, you could lose $100,000. So it's really important to review this if you're on the cusp of retirement in the next year or two, because in some cases, if we see a spike in inflation, which it looks like we may, you could actually be working for free your last year of employment. Now, the way that Exxon uses this, there's two different calculations depending upon who you are. Grandfather employees, believe it or not, I'm still working with a few of those. Actually working with two right now that are in the process of transitioning, but you have to be over 65 and over 25 years of service to be grandfathered. And what happens there is they use a lower interest rate, which is tied to the 30-year Treasury. Right now it's at 1.75% for both the first quarter and the second quarter of 2022. For most of you, however, that are younger, you're going to be in the using the PPA segment rates, which there's a first, second, and third segment. These correlate to the years of retirement. The first segment correlates to the first 5 years of retirement. The second segment is for years 6 through 15. And the third segment is going to be for years, the second segment is be years 6 through 20, and the third segment is going to be for years 21 and beyond. So for most of us, that second segment has the highest weighting to the calculation. If we take a look at these, let me kind of zoom in here. The way that they actually do this is they use the previous 2 months average of the prior quarter to determine what that actual interest rate is going to be. So the interest rates for November and December are giving us the second quarter 2022 blended rates of 1.09, 2.72, and 3.09%. Now, if we look at that just below, the first quarter, which we're in right now, is a little bit lower at 0.68% on the first segment, 2.53% on the second segment, and 3.09% is the same on the third segment. So just keep that in mind. Again, that second segment is the one that we're more focused on. So that drop of about 19 basis points should correlate to roughly about a 2% change or so in your lump sum. So going back to that example I gave you, if you have $1 million lump sum right now in the first quarter, it could theoretically go down by about $20,000 if you were to wait until the second quarter to retire. Now the trend is moving up, so we could see interest rates continue to rise, but we have that semi-crystal ball where you can look at it quarter to quarter. But if we take a look at this screen too, you can go back and look at the first quarter of 2020, where we had some higher rates at 3.04%. Or we go back to the first quarter of 2021, where we kind of bottomed out on some of those rates at 2.27%. So just keep in mind, it's really important to review where you stand right now with the interest rate calculation to determine if you're going to make a retirement decision in the next year or so, if you are taking the lump sum. Now I want to keep a quick reminder, if you're taking the annuity, that has no bearing on the interest rates. So the interest rates are only affecting you on the lump sum. Now, if you have any questions, again, feel free to just simply follow up with us at 1-800-900-5867, or you can reach us at info@theretirementgroup.com. If you're tech savvy, you want to go ahead and hold your cell phone up. There's a couple QR codes if you want to follow us on LinkedIn to get the updated information on Exxon changes, or if you'd like to schedule an appointment with myself or a number of our advisors at the Retirement Group. And I want to thank everybody for taking a quick moment, and I hope you have a great day.